I think customers, investors are more or less protected now. I think the fear of contagion has been removed. But of course, for the shareholders of Credit Suisse, it's hard. They will lose a lot. Um, and I think investors of UBS in the short run, maybe it's not looking that good. But I would be very careful about making any forecast with regard to UBS investors. I think they got a very good deal. Credit Suisse is a very good bank. It has a lot of good people. It has a lot of good lines of business. So 3 billion is really cheap. And the government is giving all kinds of assurances, additional liquidity lines. Even it will add 9 billion Swiss francs if there are any problems with unexpected losses. So, I mean, it's a very, very good deal for UBS. I think it's a sad day for the Swiss financial system because we used to have 5 big banks 30 years ago. Now we're left with one very, very big bank. That's not good. There's no competition anymore in certain lines of business. The bank is also really too big to fail. That means the government is even more challenged to support any problems in the financial system. So yeah, it's not a good thing. I think it was the right thing to do in the sense that it was very dangerous because it's an international banking crisis in the making, I think, coming from the US. Markets are very nervous, and I think an additional accident in Switzerland would have fueled a lot of problems. But I would argue that the further evolution of financial markets globally that's not depends on not on this Credit Suisse case. I think even if we have an additional problem, which of course is really negative for markets, I think it really depends on how interest rates will evolve, how the American banking system can absorb this interest rate shock, and how interest rates in Europe will move. I think, I mean, the European banking system is not as tough as the big American banks. So I think it depends on that, and it doesn't depend on what we did with Credit Suisse. But at least Switzerland did what it could do, not to to create a Lehman moment or a Lehman shock. It was, I think, even though the immediate reaction is negative in the markets, there is no panic now in the markets. I know the banking system of Europe has not fully recovered from the crisis. It's better, of course, than it used to be, but it's vulnerable. And I wouldn't be surprised if after further interest rate increases, we see problems in the banking. Maybe not the big banks, but maybe regional banks like in the US.